Hello, I'm Grace. The Korean $1 exchange rate has surpassed the 1,521 level, signaling a severe warning for the domestic economy. Looking at recent market conditions, the exchange rate has breached the 1,521 mark, an unusual figure that evokes memories of past foreign exchange crises. According to reports, the exchange rate is currently maintaining high volatility, forming a trading range that fluctuates within the 1,501 level. The fundamental driver of this surge is analyzed to be the strong dollar phenomenon, underpinned by the continued resilience of the U.S. economy. Interestingly, an anomaly has occurred where the exchange rate soared toward the 1,531 range despite the decline in international oil prices. Typically, falling oil prices lead to a reduction in import settlement costs, which serves as a downward pressure on the exchange rate, but this mechanism is currently failing to function. This implies that the variables dominating the market are being overwhelmed by monetary policy factors, specifically the value of the dollar, rather than real economy indicators like oil prices. In other words, the destructive power of the U.S.-led strong dollar trend is far outweighing the positive impact of lower oil prices. This phenomenon is not merely a matter of exchange rate figures. It is part of a broader trend of currency depreciation, where both the Korean won and the Japanese yen are weakening simultaneously. In a situation where the dollar is running solo, it can be viewed as a structural phase of weakness, where Asian currencies are collectively struggling to maintain strength. The most concerning aspect is the possibility that this high exchange rate in the 1,521 range may move beyond a temporary spike and become embedded in the economic structure. If the exchange rate remains at this level, import prices will rise sharply, exerting upward pressure on overall domestic inflation. For corporations, this imposes a direct cost burden through rising raw material import expenses, which serves as a factor in deteriorating profitability. Ultimately, rising import prices could transfer to consumer goods, creating a vicious cycle that erodes the real purchasing power of households. For the time being, we must closely monitor macroeconomic trends, with the caution that the 1,501 range could become the new baseline for the exchange rate. I'm Grace, thanks for watching.